Hello, welcome. Today, honestly, I'm just going to rant about the stock market. Where I live, no one trades stocks. It's not even a thing. No one knows what they are. No one knows whatever. I live in Perth, Western Australia, and there's no every single workmate I've ever spoken to doesn't trade stocks. So I'm just going to yell into the camera, hopefully encourage some conversation, just some little gripes and things that have always bothered me about financial influencing or the shit show of a space of financial YouTube and social media. I want to chat about shorting Tesla and a few other things. There's no structure to this video. Let's get into it. One thing that's just constantly annoying me, it really bugs me, is since I've been passionate and into the stock market, and I can go back about 10 years, right? I've always had like a few people that I've watched their YouTube videos and everything like that. And most of these people that I've used to watch, I'm not going to say any names, I remember being right into it when they first started making some videos. Why is it that when they get to a certain point, they all merge into the same shit? Like, the world's on fire and there's going to be a stock market crash. Prepare yourself. The titles are the same. Buffett is selling. Burry just sold. By the way, Michael Burry has been telling everyone that the stock market is going to crash since 2008. You were right once. 2008 is, what are we at? 16, 17 years ago. And every fucking day you come on, you tweet, and you tell everyone the market is going to crash. Just for a little exercise, let's go back to 2008. I swear, I'm not even throwing shade. I swear he's been saying this since '08. I can't even fit this. I'm going to have to do, try month bars. I need to fit it all in one thing, in one screen. This is the S&P 500. So we're being gracious here. We're just picking a diversified fund like the S&P. And let's put up let's see the returns we would have missed out on if we had listened to Mr. Michael Burry at 2008. 2006, 7. We'll be generous. We'll go there, eh? That's 2009. Let's bring that down. Let's bring that up to today's value. Oh, nice. So if he would have taken his advice and sold everything in 2008, we would have missed out on a 760% possible return. Well, that's cool, isn't it? A broken clock is always right once a day. Let's just have a look. We'll just type in stock market. I just literally do stock market, and you're going to probably have people saying the market's going to fucking... What's this? $1 trillion market bubble. But you look, these are recent, right? But I'm telling you, these same videos has been coming up since I've been watching financial YouTube 10 years ago. Every year, every day, the same fucking type of videos. Yeah, bubble, crash coming. Just, it bugs me to no end. Because one day these clowns are going to be right. Of course they're going to be right. The market does correct itself. It does sometimes crash. And if you say it's going to crash every day, one of those days you're going to be right. And when they are right, they have the right to say that they're a genius, they've seen it coming all along and they predicted this. But they've been saying it every day. Yeah, these big screens of you can see the market and it's all red. I've just typed in stock market. I'm not being biased. I haven't typed in crash or whatever. So in this same page, we've got big money is buying and big money is selling. Which one is it? But yeah, what I like to do is stock market. I look at stock market crash. Who think the market's crashing? Urgent warning, this is an industrial bubble. Don't hold cash. Why the stock market hasn't crashed yet. The banks don't want you to know. I can't really shit on clickbait titles because I use them as well, so you know. Stock market crash, don't panic. 6 months ago, we've had a 70%, no, not 70, we've had like a 20% return in the last 6 months, so right now, the stock market could crash. Stock market crash. It's what I'm getting to, man. It's like, look at this. So 2023, a bull run kind of started, right? How to use a 2023 market crash to get rich, crash and coming. Ray Dalio. I don't even. It feels weird, but I want to say Ray Dalio is a clown. But you can't really say that when someone is multiple billions of dollars richer than you. But it's just like I don't know, all the reading I've done, even Ray Dalio to me seems like a grifter. Yeah, so this is, and this stuff happens all the time. Michael Burry warned of a market crash, but he's always warning. Look at all the posts that would have to do with, look, it's happening. Why Michael Burry just sold. Bro, Michael Burry's selling every week on YouTube. Every week for the last 10 years, I've seen Michael Burry selling. Why are we fucking listening to this guy? He was right once. Actually, he did get in on that GameStop trade. I think he was actually earlier than Roaring Kitty, so that's something. But still, it's just annoying, man. Look, it's every week. It's happening once in a lifetime economic reset. The crash of 2026, crash coming. Cathie Wood, another useless investor. I don't know. There's me. Oh, it's actually... Why am I coming up under market crash? I never said the market crash. This is a wheel strategy explained. It's over. 3 years ago. It's over. Michael Burry's work. Okay, mate. Let's have a look at 3 years ago. I swear you would have missed out on 100% market return. The 2022, pretty much, eh? Get out of here. I can't see. The bars are too big. Let's go to weekly. All right, let's bring that to 2022. There we go. Bring it down. Do the average of 22, eh? We'll do there. So if you would have listened to that video, I thought you would have made more returns than that. Yeah, anyway, if you would have listened to that video, you would have missed out on a probably 60% market return for the S&P 500. My point being is ignore all the warnings. The market is always going to be skewed to the left. So if you look at a graph, right? So this is the S&P since conception. It's always, obviously we have corrections. It will most likely always, as if there's a magnet in the top right corner of your overall market graph, right? It's always going to be pulled up and to the right. And you, by trying to go short and predict market crashes and all that, you're always going to lose. That one time you're right may or may not be enough to cover the 100 times you were wrong. So I'm not ever in a fan of shorting against the market. Now, if you want to go short the S&P 500, here is what you are technically saying. Number one, you're saying you're smarter than everyone else. So let's break that down a little bit. The S&P 500 is made up of the 500 most profitable companies on the US stock market. The US stock market is by far the most profitable country on earth. You can inference that and then say that those 500 companies, largest companies on earth, and most profitable most likely employ the smartest people from the smartest universities around the world. You're betting against that. You in your shed are sitting down with no research except watching a YouTube video and saying, I'm going to bet against that. Long-term strategies, I'm betting against that. You do that every week. Wrong for a couple of years, right once. You're going to bleed out. You're going to be on the floor bleeding out until one day you're right. And even if you're right, because you cannot time when it's going to happen, guess what? You're probably going to be bankrupt by then. I think there's a famous saying from, I don't know if it was Buffett or Charlie Munger. One of them said that you can't stay solvent as long, or something like that, between going short. You might be right, but you can't remain solvent until you're right, or something like that. Meaning you're going to go insolvent by the time you're right. And that's the thing, but the beauty about the stock market is you can actually be right, but you can't pick when you're going to be right. So you can lose all your money before you're right. And that's the biggest problem with like shorting and trying to bet when the market's going to go down. You'd rather just float upstream and not go against the current. Now I understand things can feel frothy and things can this and that and things feel like, look at this. Like this, if you just looked at that, it feels like it's overvaluated. But I want to remind you something. It's just because of the way that charts and graphs present themselves. It's like a cumulative return. It kind of looks like that. If I zoomed in on way down the bottom of this chart, the tail, we're going back into the 90s here. Now it looks flat, correct, compared to the rest of the graph, yeah? And this is weekly returns. So like, for example, you're like, oh, the returns look so much more at the moment. So that's a 4% return, that's a 5%. Those are big days though, and that's in a week. But the problem is this graph is like, it's always manipulated to fit it into one display. Like, I'll show you what I mean. You see now how I'm zooming into what looked like a reasonably flat area? And now it looks quite steep. 2%, it's a small one, 4% drop in that week. So it's kind of the same. It's just the way the graph kind of presents itself when it's trying to squeeze all the data into one display. So keep that in mind. It is a bit of an optical illusion when you are looking at graphs, because if you look at this, you can make the assumption that, are we in a bubble, and you can start to panic. But it is sometimes just a perception of the actual graph itself. So keep that in mind. Now, I wanted to also talk about, because a friend of mine was talking about shorting Tesla. Let's bring up a daily chart so we can get a more accurate representation. Here's a daily graph of Tesla, right? So we're pretty much near all-time highs. Look at the missed fucking earnings. Missed, made, missed. The sales on Tesla have plateaued horrifically. Completely slowed down. If Tesla didn't get, I think it's like called carbon credits or something like that, they would pretty much no longer turn a profit. Earnings per share. Yeah, something like that. I mean, I should verify that, but without the carbon credits that they get from the government, they would probably not even be profitable or scraping through. I think Tesla's been massively over pumped. There's an interesting study I read recently that everyone that wants to buy a Tesla has probably already got one. So it's like that market of people who were going to go EV and were going to buy a Tesla has reached its peak. Now you also have competitors like BYD. And I seen a BYD car drive past the other day, and honestly, it looks really fucking sick. It actually looked quite cool. I don't know much about the price comparison and things like that. And I mean, this are just surface level observations. I've never even really dug deep into Tesla, their balance sheet or anything like that. But I do know, like if you stripped all the hype off Tesla and Elon Musk and if you looked at it for what it is, this would be one of the most overvalued companies on the S&P 500. Now the issue is, like in saying that, I mean, put your money where your mouth is, you know. I'm talking to myself when I say that. Put your money where your mouth is and go short if that's what you believe. The problem is anything that's kind of been memeified, and I see Tesla as almost memeified because you've got Elon Musk, who's this big, massive figure, right? Excellent at getting capital together, at starting these type of companies, you know, massively successful. He's got a lot of influential power, and Tesla itself, for me, goes into the brackets of a stock that has kind of been memeified. Memeified is, think of GameStop or those types of things, right? On face value, it shouldn't have that value. I'm talking about GameStop back in 2021, not today. It just shouldn't be that value, right? But because it's been memeified, you know, that kind of thing, it has that value. So betting against that is a dangerous move. But if I forgot and ignored all that and just went by the numbers, shorting Tesla would honestly make so much sense. Yeah. But obviously the problem with Musk, and it's been memeified, there's fanboys all over Wall Street Bets or whatever, pumping up Tesla no matter what. I mean, why is it back to all-time highs almost? Like, how does that make any sense when their sales are down bad and it's just eventually just based on not making any money? Well, they're going to struggle to break even, or I don't know what's going to happen. It should belong more down here. But yeah, there's the fact that a market that doesn't make any sense cannot make sense long enough, longer than me, that can stay solvent. Meaning, Tesla's financials could make no sense, and if I went short, it could continue to go up, and I could be right in 2-3 years' time. But by the time that happens, I could also be bankrupt. That is the problem with going short and betting against the market. I mean, you could think about just doing a put contract, all right? Again, you could be right, but also lose money in a put contract. So let's say if I done 2 years DTE, I bought a put contract in 2027, right? Just to give it enough time to really sink down to its true value. The graph could, let me lock this. In 2 years' time, in a year and a half of those 2 years, we could see Tesla up to here. It could make even less sense than it does now, believe it or not, and it can easily do that. And then it crashes, and it has a 50% retraction back down to here. But I put this put contract on here, and I place it out the money down here. So I'm right, but I still lose money. It's just, like, it's a trade for me makes so much sense, but I just kind of know how things can go. Like, opinion aside on cryptocurrency, let's not get into crypto this, crypto that. Does crypto honestly make sense? Like, congratulations, round of applause if you've made money trading crypto. Awesome. Sit back for a second and think, does it make sense for Bitcoin to have, what, $1 trillion market cap? Just let that sit in for a minute and think. Like, I know everything about crypto. I don't lecture me. I got it. Tell me whatever you want, whatever dream you want. It's a replacement for gold. It's a replacement for currency. Blah, blah, blah. It can't inflate like fiat currency. Okay. Do you think it really should have a $1 trillion market cap? Something that you honestly can't do nothing with. Let's be honest. What are you using it for? You going down the shops to buy groceries? Gold's been outperforming Bitcoin lately, hasn't it? It's just a number on a screen. I own a stock, I own a share in a company that produces returns. I think anyway. The reason I'm saying that is come on, man. There's a coin called fart coin. You all think I'm talking shit, don't you? I'm going to find the ticket and I'm going to show you its market cap, and then we're going to have another serious conversation. Fart coin. I think the best way to find this is, what's that crypto charting page? Because TradingView doesn't show all the currencies. I think it's Market Greco or something. Something like that, I think. Because I want to see price action. I want to show you. Bro, Fart Coin has a market cap of $678 million. Fart Coin. And you're going to lecture me about the use case of cryptocurrencies. Let me zoom this graph out. If it's had massive returns, honest. This is unbelievable. The scary thing is that if it was like that Haktua coin that had a huge pump and a full crash and no one wants any more. What a 1,500% return since when? October last year. Price zero. It went from 2 cents up to $2. You gotta be kidding me, man. All-time low. It's up 3,200% since 11 months ago. Fart coin. Do I even want to look at similar coins? Clans, horny coin, slop. Let's look at slop. Oh my god. What's the market cap? Okay, owning a $150,000 market cap on slop. Oh no. Look, it's up by 240% since its all-time lows. The reason why they had so much supply, I think that, what, $1 billion supply, and it makes their coin look so cheap. But when you're looking at this shit, go by market cap. You can't. The coin's price, same with stocks actually, the coin's price doesn't tell you anything. Because if they have billions of shares on the market, or in this case, billions of coins, it looks dirt cheap because, right, it's hundreds of a penny, or in this case, thousands of a penny. But that doesn't really actually tell you if it's cheap. You need to be looking at market cap. And if you're looking at if something doubles, you need to be thinking, can that market cap double? Don't worry about slop coin or fart coin. Just want to, even just looking at the stock market, right? You want to be thinking, can the stock I'm investing in that has a market cap of $10 billion, can that realistically, can I see that market cap going to 20? That's a doubling of the valuation of the company, basically. That's what that's saying. So think in terms of market cap as opposed to just raw share price. Yeah, it's a safer way to get more accurate when you're trying to eye things up and will this happen and will that happen. So yeah, back to kind of like Tesla, like the numbers don't have to make sense and it can still go up basically. So I'm probably not going to short it. A part of me wants to, just to like, yeah, I'm right. But that's the dangerous urge you need to think about when you're trading. If you want to be a successful market participant, there's a few key traits that you've really got to keep at bay. And I think if you do that and you stick to a set of rules that you've set from yourself, that you've learned along the line, you'll do really well. Another thing that bothers me actually is, so full disclosure, I have a diversified ETF fund. It's honestly pretty similar to, if you're in Australia and New Zealand, we have something called superannuation fund. I think in America that's probably like a 401k, I think. But it's just like here our employer will put in X amount of, a certain percentage of our salary into that fund. It's like a retirement fund. And it spreads out across the market. It can be a spread between Australia's biggest stocks, some bonds, government bonds, corporate bonds, like some more safe bonds, the cash market, and also the S&P 500 over in the US. It's like a diversified sort of thing, right? So I have obviously that super, but then I have a separate ETF that's very similar structures in that. It's a little bit more higher risk. Like I've got it more onto the stock side as opposed to bond side. So the returns are greater, but it comes with a bit more risk. But the risk as opposed to what we're doing by buying individual stocks is nothing. And that's my, like basically that's, I've got a retire fund, superannuation, then I've got this fund which is self-managed by me. And it's just regular deposits, X amount of dollars every week that just goes in there, automatically distributes and buys that stock every week, every time I distribute, and it just keeps going, right? The dividends gets reinvested and it just keeps accumulating. Everyone should be doing that, okay? Okay. And that should be probably bulk of your money. Actually, who gives a fuck? Just set a target and just don't even look at it and just keep it going. I'm not going to tell you what to do. Now on this side, where you're trading, you're buying stocks, you're doing research, this is money that you are come to terms with, and you understand the risk, and you don't mind losing either. So you have to be willing and understanding to, if I might lose all my money on this investment. And if you're comfortable with doing that, just honestly go for it. What I'm sick of looking at is if you go on comment sections on financial TikTok or Instagram or something like that, and someone's posting the returns of an investment they've made, and it could be like the stock's gone up by 100%, the cryptocurrency has gone up by X amount of %. There's always going to be that clown in the comment section that has to say, well, actually, those returns aren't achievable on a long-term basis because the market average is only 8%. And they always give you that lecture. And it's always some virgin, like the most obvious thing, bro. That kid would have sat up right up front of the class. And it really annoys me because, dude, we know, if you don't know that, then you probably shouldn't be trading. I think 99% of people know that. Why do you got to state something so painstakingly obvious and annoying? I bought that stock and made 100% return because I fucking wanted to. Because I love trading. I love everything about the markets. And for me, this is my game. This is how I win. This is what I enjoy doing with my spare time. So shut the fuck up. Keep investing in your diversified portfolio and don't even comment. It annoys me because yes, we know, yes, we all probably do that as responsible investors, but because I'm passionate about it, because this is my sport, I am going to buy risky assets, I am going to trade options, and I'm just going to do what I want with money I'm willing to lose. And that mindset is the mindset you should probably be in if you want to get into trading and investing, right? Bulk money tied up in a nice safe ETF, making weekly contributions. Once you're in a good position, you're on top of your bills, you're on top of your rent. Bonus, if you've already bought your first house, that deposit's out the way. Maybe you're married, you've got the life's biggest expenses is behind you. A wind in your hair, you've got a cash safety net, you've got this diversified ETF set up, and now it's time to have a bit of fun and put aside a little bit of cash for your enjoyable side hobby, which is investing in stock market speculation. And that's the beauty of it. And that's where I'm at. And that's where I hope everyone gets to a point where they can do that. If a house is just too far out of reach for you, but you just love the stock market investing, go for it, but just keep in mind, keep reminding yourself, if I wake up tomorrow and my portfolio is zero, how am I going to feel? Will I be able to continue on with life? If the answer is yes, so be it. Anyway, I'm going to wrap it up there. I feel like talking about the market with someone, even if it's just to a blank screen. If you enjoy these videos, I'll do more of them. I'll just do like a weekly market rant. I've got a lot more stuff to get into, like shit like this. OpenAI buys capacity from OCI. Oracle stock goes up, buys more chips from NVIDIA. NVIDIA stock goes up. NVIDIA has way too much fucking cash, so NVIDIA invests $100 billion in OpenAI. OpenAI buys capacity from, and the cycle continues. So at the moment, you've got OpenAI, Oracle, and NVIDIA in a human fucking centipede, creating an infinite money glitch. And we will end the video with that. So we end the video with that, an infinite money glitch, human centipede with OpenAI, Oracle, and NVIDIA. Tell those virgins to shut the hell up about telling you to invest in a diversified portfolio and that your returns are impossible. We know you clowns. We're doing this because we like the game, for the love of the game. And the last note is Michael Burry needs to get out of here, right? He's been screaming a market crash since 2008. We celebrate the one time he's right, but we ignore that 1,000 times he's fucking wrong, and I'm sick of hearing about him. Legendary trader, by the way. Honestly, he's a legend. I'm just a nihilist. All right, thanks for watching.